Hi, good evening everyone. Nice to see you again. I'm Amy Lei, a stock trainer at Homely Chart Company, which is a stock training school. Okay, so today is the 14th video of my channel, Amy Stock Analysis Daily. And today is already also the Friday, right? So the topic today is the weekly summary. But before we go to the contents of today's topic, I firstly would like to announce that my video update time will be changed again to 8 p.m. every day, because several days ago I already changed the time to 6 p.m. But then someone told me, why not change to 8 p.m. because that's when most of people would have time. Most of people are quite free around 8 p.m. Then I told myself, well, why not if it's more convenient for most of people, right? Okay, so means from next Monday on, the video update time of my channel would be changed to 8 p.m. every day, okay? So about the market performance this week, from the angle of significant news, not so much significant news have caught my eyes, but this week's candlestick chart, I have a lot to say, okay? So firstly, about the US market, right? So about the US market, actually, I have mentioned this bearish divergence for Nasdaq, right? So the price for Nasdaq has been hitting new highs, but for our fund inflow, the high point is becoming lower. So this is already a bearish divergence. And after the bearish divergence, we see the market drop a bit, but not so much, right? So currently the price is still above this long bullish candle here. So currently, the market hasn't yet begun to drop greatly, but we know the danger is accumulating secretly there, right? And for Dow Jones, we see the price currently is at a significant support level of, based on our Homely rainbow, is the white rainbow lines, and below we have the blue and yellow rainbow lines very close to each other. So means for Dow Jones, below we have a very strong support, and then above the downward gap here is currently acting as a very strong resistance for short term, right? But if we check the money flow by checking the deviation expert, we will realize that for Dow Jones, the fund inflow for recent several months actually has been quite strong, right? Then if we check Nasdaq, for Nasdaq we see the high points hasn't yet ever since this let's see the timing here, ever since this candle here, the money flow never hit new highs. But for our Dow Jones, actually the high point is becoming higher and higher. Okay, so means the upward momentum for Dow Jones is should be stronger. Okay, so but we know that although it seems like the US market currently is still quite strong, but if we check the performance between Nasdaq and Dow Jones, we see that currently it's a potential bearish divergence for the two indexes, because our Nasdaq already hit a new high, but for Dow Jones, the high point, current high point, is still quite far away from the previous high. So this is a potential bearish divergence, and I mentioned in my previous videos for several times, every time before the big corrections for the US market, there will be a bearish divergence between the Nasdaq and Dow Jones. And if we check previously, for example, this relatively big drop, before that we see the Dow Jones, the high point lower, but Nasdaq become higher. So this is a bearish divergence. And then also before this drop, this is not a very big drop, but before that we also have the divergence. Okay, so I'm not showing you a very long period, but if you are interested, you can further check the longer time of the performance between Nasdaq and Dow Jones. You'll realize that almost every time before the major great corrections, there is such phenomenon, which is the bearish divergence between Nasdaq and Dow Jones. So means what? In conclusion, for the US market, the performance currently, it doesn't really reflect the reality, because we know that the reality is the US market, the US economy is seriously damaged by the COVID-19, right? So the economy is not recovering that fast, but for the market, the stock market actually quickly become quite bullish, at least for recent several months. So why? So we all know the reason, because for the stock market, as long as money flow in the market, the price would go up, right? Then for the US, the reason the market can be so strong, only because of the policies taken by the Federal Reserve. They are trying their best to prevent the stock market from crashing. Okay, so that's really the reason, and that's why the market performance doesn't really reflect the reality. Okay, so then meanwhile, the risk keeps accumulating all the time. Just now we have checked the potential bearish divergence between the Dow Jones and Nasdaq, right? And also for Nasdaq, for short term, we already have this bearish divergence, and Nasdaq already corrected a bit, and the upward momentum is not as strong as before, right? So for short term, it's also a bit dangerous for the US market. And then don't forget that 19th June 2020 means today. Actually, today is the quadruple witching day. Do you know this quadruple witching day? Some of you maybe you already know. The quadruple means what? Means 4 types of financial agreement, which are the index futures, index options, stock options, and stock futures. Okay, so on the third Friday of March, June, September, and December every year, all these 4 types of financial agreements would expire. Okay, so today happens to be the third Friday in June, right? So means today is the quadruple witching day for the US market. Okay, so what would happen on that quadruple witching day? Usually the market would fluctuate greatly, so there will be very big fluctuation on that day. So considering currently the US market is also at a very key position here, right? So the performance tonight will be very important, at least for short term. Okay, so in conclusion, for the US market, currently the situation is, it's like we have a bomb that may be triggered at any time, right? So then just keep accumulating, only that we don't know when the bomb would really be really triggered, right? So then how do we deal with such a situation? Firstly, the best strategy would always be a short-term trading, right? Short-term trading. And secondly, you need to set up and strictly abide by your own trading system, and especially your cut loss standard. Very important, because for short-term trading, so nobody can secure 100% probability. Believe me, the longer trading term you choose, the more stable or the safer your money can be. If you choose short-term trading, means you are more speculation oriented. If that's the case, your trading system is extremely important. Let's say what type of shares you would pick. First thing, right? You need to pick the right share, right? And then after that, when exactly do you buy? After you buy, when exactly do you sell if you have made some profit? And what's more important is, what if after you buy, the price didn't move in your favor, rather it dropped and you are stuck? So that is why cutting loss is very important. If you cannot do that, cut loss in time, believe me, you will lose great money in the stock market, and it will be very difficult for you to make profit in the market. So means for the US, if you are really trading the US market, so you really need to set up your own trading system and abide by it strictly. And especially I'm emphasizing on the cut loss. Okay, so this is for the US market. Then let's continue to check for our STI and for Hang Seng Index, because the two markets are like twin brothers. So usually I'd like to analyze the two markets together. Okay, so for STI, if we just check a simple indicator, the powerful homely rainbow, we will realize that currently the price below, we have the strong support at the yellow rainbow lines, and above at the blue rainbow lines, we have very strong resistance. We see that early June, the market has been quite bullish for roughly 1 week, more than 1 week, right? It's quite bullish. Ever since 1st June, I think is a Monday, and then we see it has been quite bullish. But when it touched the strong resistance at the blue rainbow lines, then drop. And currently we have strong support below the yellow rainbow lines, and above we have the resistance at the blue rainbow lines. Then if we check the money flow, the situation for the money flow, actually we see for the price, the high point hasn't yet hit a new high. If we check the previous highs here, and currently the high point is here. So for the price, the high point is still lower than the previous high. But if we check the money flow, we see that actually the money inflow is faster than the price movement, because we see the current high point is already higher than the previous highs, right? So that's a healthy signal. And in my last video, I also shared, if we check the weekly chart, actually we get bullish reversal signal in the weekly chart. Means at least for medium term, the market for Singapore, the Singapore market actually is bullish. But that's only for medium term. It's not about the long term. For long term, still we need to wait and see. Okay, then for Hang Seng Index, you will be the similar phenomenon. Resistance at the blue rainbow lines and currently support at the yellow rainbow lines. The only difference is if we check the money flow for Hang Seng Index, we see that currently the high point for the money inflow actually is still roughly going flat. If you connect the highs for the deviation expert, which check the money inflow and outflow, right? And we will see the high points roughly going flat. And just now we check the performance for STI, we realize that currently the high point of DE for STI is actually higher than the previous high, but for our Hang Seng Index, it's only going flat. Means money inflow for Hang Seng Index is weaker, and that's why we see that for this rally for Hang Seng Index is not as strong as that of STI, right? So the reason behind is the money flow. I keep mentioning this and emphasize this again and again. Money flow, inflow and outflow, is the only reliable thing in terms of technical analysis. Once money flow in, price has no choice but to go up. Money flow out, the price also has no choice but to drop. Okay, so in conclusion, for STI and Hang Seng Index for the Singapore market and Hong Kong market, the upward momentum becomes already weak after forceful rally early June. And currently, we have strong support below, but above, we also have a strong resistance. And for individual stocks, you will be able to spot a very interesting phenomenon, which is the penny stocks become crazily bullish. When the index, the direction of the index not clear. Currently, the direction for the index for short term is not clear, right? Short term, we have a big correction, but it doesn't like the market is going to correct a lot currently. We still need to wait and see, right? But for the individual stocks, you will realize that a lot of penny stocks, either for the Singapore market or for the Hong Kong market, become really crazily bullish. In my video yesterday, I shared with you the video that I shared in the video that the penny stocks went crazily bullish, right? So I mentioned the Singapore penny stocks, but if you continue to check the penny stocks for the Hong Kong market, you will also see the same phenomenon, the similar phenomenon. Penny stocks, very crazy. One day it might go up by 20, 30% or 10%. A lot of 8%, that's a small one compared with those up by 20 or 30%, right? A lot. And yesterday I shared with you 7, right? I think it should be 7. I shared with you 7 penny stocks of Singapore market, and you continue to check the performance today. A lot of them remain still quite bullish. And also today I got I heard from others that some more penny stocks suddenly become quite bullish today. Okay, so you see, why we have such a interesting phenomenon? Actually, if you have I will read a book wrote by Karl Marx. The book name is called Das Kapital, right? So it's a very famous book, and I believe almost all of you know this book, right? So in the book, it says that the capital as to no profit. Either when the market is bullish or bearish, the capital always has this this strong desire to earn more profit. Considering currently the blue chips, because they all follow the indexes, right? The blue chips have no big chance. Then the money, the capital has no choice but to flow into the penny stocks, because penny stocks are cheap. Penny stocks can be easily controlled with small amount of capital, right? So when the market is not so safe, the direction is not so clear, then the money choose to flow into the penny stocks. Okay, so if you want to catch such opportunities, I need to remind you, this is called pure speculation, or let's say it's more speculation oriented. Still, if you have methods, you have a good tool, you still can catch some penny stocks and safely. It's not really pure speculation. I mean, speculation is something much like a gambling. It's not gambling. If you have methods, you have the tool, the good tool, you still can make profit by buying such penny stocks, but it's not speculation. It's you trade with your own trading system. So it go back go back again to our trading system. So considering the current situation for the Singapore market and Hong Kong market, it's also the same. Short-term trading will be our best strategy, because for the penny stocks, they're not so reliable to invest for long term, right? So only short term. So if you trade in short term, that's speculation oriented. What we want to do is we make it less speculative. Make it less speculative so that you can always make sure your money is safe and you can maximize your profit. Okay, so firstly, the strategy for current market for Singapore and Hong Kong short term, and the most important thing still is to set up and strictly abide by your own trading system. And also cutting loss is very, very important when it comes to short-term speculation. Once you realize that it's not the right timing, you are wrong. You need to cut loss in time. Very important. Okay, so how to set up your own trading system? And also you need to abide by it strictly, right? So for Homely, we have been in this field of stock market for more than 20 years. We have been training numerous retail investors. So we actually have already set up a very effective trading system. And a lot of Homely members have learned this trading system in our training courses and also by using our Homely software, right? So if you also want to set up your own trading system, and maybe you want to set up a effective trading system that can really can really keep your money safe and can really help you make great profit, you can maybe come to attend our training courses to have a try, have a taste. And actually this weekend, we have 2 splendid seminars. And if you're interested, feel free to WhatsApp me, okay? Okay, so that's for the Singapore and the Hong Kong market. Then how about the Malaysia market? So for Malaysia market, we also can check the Homely rainbow white lines. And currently, for KOCI, actually is just at a very strong support of the white rainbow lines, because we know the white rainbow lines stand for the long-term trend. We see the price already break up the white rainbow lines and then pull back to test whether or not the support is strong enough. If the price in near future can still stay above the white rainbow lines, means what? This might mean the KOCI finally can give us greater opportunity, maybe for medium term to long term. Okay, so means for KOCI, maybe it's a promising market for us. And then we check the money flow, also quite strong, right? The high points of the indicator deviation expert already hit new highs, higher high. But for the price, the high point a bit lower than the previous high. So means money inflow is sufficient enough. So we have this hope, or we have this probability that this might really be the bullish reversal for the KOCI, for the Malaysia market. And then for the Malaysia market, in conclusion, KOCI now is on the brink of a long-term bullish reversal. And if you continue to check the individual stocks, you will realize that numerous shares are quite bullish or turning quite bullish for the Malaysian market. I believe compared with the rest of the 3, it's easier to trade for the Malaysia, and even greater opportunities compared with the Singapore market. Okay, so then this phenomenon actually tell us that indexes discount everything. Indexes discount everything. This is one of the 7 tenets of dog theory. And why we have so many individual stocks suddenly become bullish or already become bullish, because we know that KOCI now is on the brink of long-term bullish reversal. That's the reason, right? And then for the Malaysian market, our current strategy, you can do either short-term trading, or maybe you can try some medium-term to long-term trading. Okay, and how you can do that? Again, you need to set up and strictly abide by your own trading system so that you can maximize your profits. Okay, for even if in future the Malaysian market becomes long-term bullish, if you don't have your own effective trading system, then you only make very small profit, very limited profit. And what's more, when the market already reached the top, it's almost certain that you will be stuck there. And after you are stuck, it's almost certain that you will keep holding all the time until the market drop to the bottom area, and then you choose to leave at a great loss. So that's how the market performs for a very long time already. And that's also why the retailers cannot make profit. Few retailers can make profit. If you want to change your destiny, the destiny that retailers can hardly make profit in the market, you really need to consider to learn and improve your capacity to do all the analysis and your capacity to trade and make profit independently all by yourself. So Homely, as the training school, that is what we are doing all the time, to help our members get this capacity to do the analysis, strategy making, and make profit constantly in the stock market so that they can always be the final winner. Okay, so that's the market performance we have checked and our best trading strategies, right? So then you will realize that for either market you are trading, you are in, you have to set up your own trading system, right? And this trading system, it must include your filtering strategy, what stocks to pick, and your entry and exit, and your cut loss, and your risk management, and also your capital management. Okay, and finally here, considering for these 4 different markets, the situation is a bit different. For some, we might say it's not so safe, the direction not so clear, but for some, maybe we have a greater opportunity, greater chances. So here, I recommend you one indicator that can make sure that you are safe and you can maximize your profit, either it's a bullish market or bearish market. Okay, so for US market, currently we are not sure the future direction for the long term. We're not so sure, right? And then it's not so safe, means it's not so safe to buy and hold for a long time. But then for the Malaysian market, just now we checked, maybe it's the possible long-term reversal. So let's say in future, really the Malaysian market turn to bullish. So then for KOCI, then you may be buy and hold for longer time, right? But no matter you are in the bullish market or in the bearish market, this one indicator called multicolor dragon can always help you secure your profit and maximize your profit and help you avoid great losses. Why? Reason? I mentioned money flow is the only reliable thing in the stock market. I'm talking about technical analysis, not fundamental. Okay? According to technical, money flow is the only reliable thing. And this multicolor dragon happen to help us track the traces of the big boys the green bars, right? And then the retailers, the big boys is the red bars, forgive me. And then retailers, green bars, and also those speculators in and out frequently, we call them speculators, call them hot money, right? We know that as long as the big boys in and as long as the big boys take control, it's impossible that the price doesn't go up. Okay, so for example, you see this is one malicious share. It's currently you see the price is already $1. It's not that a panic stock, right? It's not a really panic stock. But do you know before the price rise to the current level $1, at the bottom it's only 20 cents. 20 cents. And you see, in just 51 days, this share is sold up by 542%. So that's why previously, not a long time ago, just 51 trading days ago, it's quite a cheap. We call it it's quite a cheap share. We call it penny stock. But currently, you can hardly call it a penny stock, right? So then, why it can be so strong? You check the performance of multicolor dragon, you will know the answer. You see, ever since this candle on, the big boys after reached 75%, remain above very stably quite a long time until now. And actually, for this case, it almost reached 100%. So the reason it can be so crazy, only because the big boys take full control. It's called take full control. Not only take control, but take full control. Okay, so you see, penny stocks, if you want to do speculation, you want to buy penny stocks, why not follow multicolor dragon? You make sure that this is the right stock to pick, right penny stock. Because for penny stock, it's not like everyone can go up like this. For many, they just go down all the time, or up quite a volatile ups and downs, but no great profit you can make. But for this multicolor dragon, if you follow it, even it's the penny stocks, you are doing speculation, you still can make sure that you are safe and make sure you have the greatest profit. This is a penny stock, right? And then continue to show you another example. So this is a malicious share. Okay, it's a malicious share, and you see, for a very long time, the red bars means the big boys, right? The red bar also remains stably above 70% for until now, up until now. And if you check this circle here, after that circle, it should be 4 days ago until now, until last night. In 4 trading days, the share is sold up by 32%. 32%. And you see the price for this share is not a very cheap one. It's $62 now, right? So it's let's say medium priced US share. Okay, so you see, in 4 days you can secure 32%. That's also not bad, right? It's also very good. And you only need to follow multicolor dragon, right? And why I share with you this case, actually this is one share that one of my members have bought recently, and he bought exactly on this circled candle. He bought on this candle, and then in just 4 days he already made a profit more than 30%. And he has bought this share and picked this share based on the multicolor dragon, of course, and also based on one other indicator which can give us explicit short-term entry point. Today I'm not going to share with you which indicator he has referred to get this entry point. Yeah, but still you follow the big boys, you always can make profit and always make great profit. Either you are trading the penny stock or you are trading the more expensive blue chips. Okay, and I can show you. You see, this is our chat history. This is our chat history, and he just WhatsApped me this morning. Okay, so I'm still quite proud and happy for him. And he mentioned, you see, you can check the position he bought at 47, and currently the price is already 62, and you see his profit range is 30%. Okay, and you see this is it's the same share, right? FASTL, Fastly. The code is FSLY. You check, it's the same share, Fastly, FSLY, right? And he just bought on 15th June, 4 days ago. 15th June, you check, 4 days ago. You see, 30%. This is also, see, 30%, right? So this is exactly where he bought. And yeah, he make profit by following the big boys. Okay, so that's all for today's sharing, and don't forget that from next Monday on, my video update time would be changed to 8 p.m. Okay, so in the end, if you like this video, don't forget to give me a thumb up and subscribe, and also you're welcome to share this video with your friends. Okay, so that's all for today. See you next Monday. Bye bye.